Members of Congress tonight have no idea what's going on with the federal government's huge bailout of the financial industry. The government has already given financial institutions trillions of dollars, quite literally, the Fed putting out $2 trillion in loans over the past year and a half. Congress don't know who's received that money, and the Federal Reserve refuses to be held accountable or to give any kind of transparency at all. Louise Schiavone with our report.
The Federal Reserve are working overtime to shore up the financial system. But more and more economists and strategists say what's missing are results and transparency, starting with the massive loans now issued by the Federal Reserve. The Fed resisting calls to say who's getting them.
I don't think it should be okay with anybody right now. Congress should want to know. The Fed is not, even though we want it to be independent, it's not a power unto itself that makes its own laws.
The Federal Reserve tells CNN that about $1.5 trillion in loans have been issued by the central bank. It's an extraordinary amount of money, considering the fact that in the summer of 2007, outstanding Fed loans stood at $100 million. But out of concern for the reputations and soundness of the institutions involved, the Fed will not report who's getting the money now and what collateral they're using.
Taxpayers are stretched thin, and to tell taxpayers that it's not really any of their concern where $1 trillion may be headed, not to mention how much more there may be and will be after this, is really unconscionable.
On a parallel track, the financial sector bailout, which both the Treasury and analysts agree is not yielding immediate results.
Excess cash reserves of banks, usually they blend to each other. It's usually somewhere between $3 and $7 billion collectively for all the banks. I just looked up the number today. It's approaching $300 billion. They don't want to lend it.
And people are losing their jobs.
All of these nightmare scenarios that were painted while this bailout was being debated are starting to come true.
All right, in the wake of volatile stock markets and concerns about the economy, sales of physical gold are hitting record levels as people seek safety in the precious metal. CNBC's Jane Wells is in Santa Monica, California with more on the consumer gold rush. Jane.
Hi, Melissa. I'm at Goldline. I got 100 traders behind me. You know, gold is up again today, as if rates are cut, cash will seem less profitable. But regardless of where gold has been going, and it's way down from where it was 3 weeks ago, sales of physical gold are way up. With me is Mark Albarian, the CEO of Goldline, along with Jeff Farnham, one of his customers. Mark, how much is business up?
We've had record days since September 15th. I'd say business is probably up 300%.
Wow. So since Lehman went under, gold sales, physical gold sales are up.
They are, and when the stock market started going down, people started getting a little bit nervous and started increasing their gold holdings.
How much of this buying is fear?
I think a lot of it is fear and diversification. A lot of people realize they didn't have any gold in their portfolio. They know it makes sense to do it, and now with the price very attractive, they're adding physical gold.
Jeff Farnham, what are you buying?
I'm buying fine numismatics. They're older coins that were in circulation here in the United States in the past, and they have a beauty to them as well as gold value.
How much are you buying?
I've spent about $20,000 in the last couple of months.
Wow. Since when?
June.
So since gold went up to over 1,000, then down, then back to 900, have your prices gone up and down with that?
No, the older coins don't vary as much as the current value of gold.
So you're not buying out of fear, you're buying it for investment?
Investment, and it's a good investment, and gold is a good thing to have at this point in time.
Mark, how are your margins doing? There's such a lack of supply, the demand is so high. Are you able to pass, how much more, for example, what am I going to pay for that over the price of gold?
This gold American Eagle 1 ounce coin right now is about $90 over the price of gold. It used to be that the markup on the coin was about 4%. The U.S. government charges 3%. The dealers make about 1%. Right now at $90 over, you see the premiums have gone up to 12%. Our margins have gone from about 1% to 2% on this coin because we can't get enough of them.
What is your average customer buying?
Average customer is buying a combination of coins like this and some of the coins that Jeff is purchasing. They like the older coins. Some of the reasons for it is some of the older coins offer some privacy features, and there's some benefits because of the possibility they go up because of their rare coin value.
Now you got 100 traders here, but you're hiring.
We are.
You're going to double your workforce.
In January, we're going to bring in 100 additional traders.
Who are you hiring?
Former mortgage brokers, real estate brokers, stock brokers, people in the general LA area that are looking for a change of career.
Who are out of work.
In some cases, yes.
And now the most popular coin is?
Probably the most popular coin right now is the American Gold Eagle. This is the 1 ounce coin that was made, it's been made since 1986 by the U.S. Mint.
Now, you used to be able to buy Krugerrands at a discount because they didn't have the same cachet. Is that still true?
Right now, almost all 1 ounce gold coins will cost the consumer between $80 and $90 over the price of gold.
So everything has about the same premium?
About the same premium, and people are generally buying American coins right now at the same price.
All right, Melissa, that's the latest from here. Back to you.
Yeah, Jane, I have a quick question for Mark, because, you know, he said he's hiring real estate brokers. Also, it was maybe 2 or 3 weeks ago, there was a story on the front page of the FT that said that it's hard to even get your hands on physical gold because there's such a flight to, you know, that kind of safety and quality in these tumultuous times. That's a little like having either the bull or the bear on the front of Business Week. It seems like it's the classic sign of a top in physical gold. Is he worried about that?
I'm not worried about it because gold was $1,030 per ounce, and right now we have gold at about $765. So gold has come down 30%. Usually when you see gold at a top, you've reached a new high. And so for gold to reach a new high, you'll have to be above $1,030 again. When you go back to 1980, gold was about $850. That's about $2,200 in current dollars as far as purchasing power. So I think gold's probably not near a top.
Well, Jeff, I mean, I want to ask you the same question because we've seen in our own commercials here on the air, you know, people calling for gold. I saw a story on the Today Show saying how much money you could get if you just trade in your old jewelry. All those things a sign of a top to me. Are you worried?
Me? No, I'm not worried at this point in time.
You've been buying gold a long time?
Yeah, I have some gold, and the price of gold seems to go up and down with the economy, and I presume that it will continue to hit new highs as the economy struggles at this point in time.
Melissa?
Yeah, Jane, I would wonder, too, you know, they have, Mark was saying that he has lots of plans for expansion there. How much is he planning on expanding, and is he worried about, you know, sort of the downturn in consumer spending having an impact on that if people buy less jewelry?
You're going to double your staff, but you were worried when you moved to this huge facility back, what, almost a year ago, that that was the top.
Well, I wasn't really worried it was the top. Some people thought it was. Our growth plans have been planned for 5 or plus years. So whether gold goes up or down, we believe that the demand for gold is going to increase. And as our company gets greater presence, we think we're the industry leader. We think we're going to grow.
I assume these are all commission employees, so that if you have to downsize, you don't have that much overhead.
After the initial training period, yeah, they're commissioned employees, and generally speaking, they've been able to.
Let's get back to our chart man, Daryl Guppy. Daryl, start clearing some emails are backing up. Ed from Toronto in Canada wants to know your opinion on gold, what the charts say, and also on the Amex Gold Bugs Index, the HUI.
The central feature with, we've got Amex Gold Bugs on the chart at the moment, the central feature with Amex Gold Bugs is they're reflecting what's happening in the underlying, and that is a severe sell-off taking place. In terms of gold, we're looking at a downside target of around 690 with support coming in at around 660. So we can expect to see some consolidation between 660 and 690. This is a long-term head and shoulders pattern. The market has come off quite dramatically and will continue to fall and test that 660 level.
Nathan Filipello is asking a question close to my heart as well. Where is crude and natural gas?